found in Bursa, Malaysia, which is Nestle and Kawan Food Berhad. Let's begin with Nestle, a global giant with a rich history spanning over 150 years. Founded in Beijing, Switzerland, Nestle is recognized as the largest food and beverage company worldwide. Its origin traces back to 1866 with the establishment of Anglo-Swiss Condensed Milk Company by Charles and George Page. Shortly after, in 1867, Henry Nestle developed a baby food product called Very Lanky, which laid the foundation for the company we know today. In 1905, these two companies merged to form the Nestle Group. Nestle's founding purpose has always been to improve the quality of life for individuals and future generations. This mission drives the company's commitment to environmental sustainability and promoting healthier lifestyles. The company's logo, featuring a bird feeding its young, symbolizes care and nourishment, reflecting its core values. With a vision to be a leader in nutrition, health and wellness, Nestle operates approximately 337 factories across 75 countries. In Malaysia alone, Nestle runs 6 factories employing over 5,000 people and produces more than 500 halal certified products, catering to the diverse needs of the market. So, for the Kawan Food Berhad, a proud Malaysian company with over 6 decades of experience in producing frozen Asian foods. What began as a small family business making traditional pastries has grown into a respected name known for products such as spring roll pastry, kuih paratha, and plant-based foods. Founded by Gan Tiang Chai, whose entrepreneurial journey was inspired by his parents, Kawan Food started as Ken Guan Trading in the late 1970s. And by 1984, Kawan Food expanded its reach by exporting to Australia, and over the years it has grown to export to 36 countries with a workforce of approximately 660 employees.
In this section, I will explain 4 key types of financial ratio that are essential for understanding companies' overall performance, which is liquidity ratio, efficiency ratio, leverage ratio, and profitability ratio. For the first one is current ratio. The current ratio is a fundamental liquidity ratio that measures a company's ability to meet its short-term obligation using its current asset. Calculated using this formula, current asset divide current liabilities. For Kawan Food, the current ratio is 4.55 times, indicating strong liquidity and financial flexibility. In contrast, Nestle current ratio is 0.55 times, suggesting potential difficulty in covering short-term debt. This comparison reveals that Kawan Food is a significantly better liquidity position than Nestle, with a more favorable capacity to manage its immediate financial responsibility. Next, the quick ratio is more strictly measure of liquidity compared to the current ratio, as it excludes less liquid current asset like inventory and prepaid spend. The formula is current asset minus inventory minus prepaid spend divided by current liabilities. For the Kawan Food, the quick ratio is 3.71 times. This indicates that Kawan Food has 3.71 ringgit in highly liquid asset for every 1 ringgit of short-term liabilities. On the other hand, Nestle quick ratio is 0.2. This shows that Nestle hold only 0.2 ringgit in liquid asset for every 1 ringgit of current liabilities. In comparison, Kawan Food demonstrates for a better short-term financial strength, suggesting it is better prepared to cover immediate obligation without relying the save of inventory. Next, we have efficiency ratio. For the first one is inventory turnover ratio. The inventory turnover ratio is an efficiency ratio that measures how quickly a company sells and replaces its inventory over a period of times. For Kawan Food, inventory turnover ratio is 10.65 times. This means Kawan Food is able to sell and restock its inventory over 10 times a year. In comparison, Nestle inventory turnover ratio is 5.22 times. This indicates that Nestle inventory is roughly 5 times a year. Therefore, Kawan Food demonstrates stronger inventory efficiency as its products are moving faster through the supply. Next, we have average collection period. Average collection period is an efficiency ratio that measures the average number of days a company takes to collect payment from its customer. For Kawan Food, average collection period is 126 days, meaning it takes Kawan Food about 4 months to collect payment from its customer. In comparison, Nestle average collection period is 26 days. This shows that Nestle collects its receivable much faster. Okay, next we have non-current asset turnover. Non-current asset turnover ratio is an efficiency indicator that measures how effectively a company uses its long-term assets like property, plant and equipment to generate revenue. The formula is sales over net non-current asset. For Kawan Food, the turnover ratio is 1.43 times. Meaning every 1 ringgit in non-current asset generated 1.43 in sales. In contrast, Nestle non-current asset turnover is 2.67 times. This suggests that Nestle is utilizing its fixed asset more efficiently to drive revenue compared to Kawan Food. Next, we have total asset turnover. The total asset turnover ratio in efficiency shows that how effectively a company uses all its assets to generate revenue. For Kawan Food, total asset turnover 1.3455 times, meaning 1 ringgit in asset generated 1.35 in sales. Meanwhile, Nestle total asset turnover leading 1.7 times. This means Nestle is more efficient in utilizing its total asset to drive revenue. Okay, next we move on to the leverage ratio. For the first one is the debt ratio. Debt ratio is a leverage ratio that indicates the proportion of company's assets that are financed by debt. For Kawan Food, the debt ratio is 28.74%. Other than that, Nestle debt ratio is 85%. It shows that Kawan Food operates with lower financial leverage, potentially making it more stable in times of economic uncertainty. Next, the debt to equity ratio. Debt equity ratio is a leverage ratio that shows how much a company relies on debt compared to the shareholders' equity to finance its operation. For Kawan Food, debt ratio is 70.4%. It is indicating that a conservative and lower risk financial strategy. In contrast, Nestle has debt to equity ratio 201.75%. This shows that Nestle's total debt is more than double its equity, reflecting high financial leverage. Next, times interest earned. The time interest earned ratio is the measure of a company's ability to meet its interest obligation using its operating profit. For Kawan Food, time interest earned is 349.45 times. This means Kawan Food can cover its annual interest expense nearly 350 times. Meanwhile, Nestle times interest earned is 9.5 times. Although this is still healthy, this is significantly lower than Kawan Food's ratio.
Assalamualaikum, I am Nila Commercial Media Manager with metric number 1232601. Okay, so I will start with the profitability ratio of both company Kawan Food Berhad and Nestle Malaysia Berhad. Okay, for the first margin, they indicate the percentage of revenue that relates as profit after expenses, taxes, and prepaid dividends has been paid based on that ratio and margin. Kawan Food has a higher percentage than 108% of profit after expenses, taxes, and prepaid dividends has been paid based on calculation that we got. Kawan Food has a higher percentage at 9.9% than Nestle has 6.6768%. That shows that Kawan Food is more efficient at converting its sales to the income. Also shows that the company has greater that show how much the company earned after deducting the cost of goods and distributing the calculation that we got. That Kawan Food has a higher gross profit margin at 31.20% compared to Nestle at 30.28%. That indicates that Kawan Food has more effective in controlling its cost of goods sold and has implemented a better pricing strategy. Next ratio is operating profit margin. That shows how much the profit company made after deducting all cost and operating expenses, including interest and tax. It reflects the efficiency of the company in managing its operation expenses. Okay, so after calculation that we get, the Kawan Food has 12.91%, which is higher than Nestle at 9.78%. Indicates that Kawan Food is better than Nestle at controlling its operating expenses and generating profit from its core business activities. And then the next one, return on assets (ROA) shows how effectively management is using its company assets to generate profit. After calculation, we Kawan Food recorded 13.31%, which is higher than Nestle at 11.39%. That shows that Kawan Food has a higher ROA compared to Nestle. We find that Kawan Food is more efficient at generating profit from its assets. And the last one is return on equity (ROE). That shows how effectively management is using the company's assets to generate profit. And we get Nestle has a very high percentage at 75.90%, and Kawan Food at 8.06%. That shows that Kawan Food has a lower ROA compared to Nestle. We find that Nestle is more efficient at generating profit from its business. That shows how much the company earns after accounting for the cost of goods sold. So based on the calculation that we got, Kawan Food has a higher gross profit margin at 31.20% compared to Nestle at 30.28%. That indicates that Kawan Food has more effective in controlling its cost of goods sold and has implemented a better pricing strategy.
Assalamualaikum warahmatullahi wabarakatuh. My name is Berhad with metric number 1232676, and I will present on SWOT analysis in 2024 for company Nestle. Ladies and gentlemen, let's start the SWOT analysis with Nestle's strength. These are the internal advantages that drive its global success, including strong branding, wide distribution, and efficient operations. In 2024, Nestle recorded a high return on equity (ROE), indicating its strong ability to generate profit from shareholders' investments. This is a positive signal for current and potential investors. A higher ROE often translates into greater dividend potential, which enhances investor confidence. As a result, more investors may be drawn to the company, increasing demand for Nestle shares and supporting a rise in the stock price. One of the key contributions to this strong ROE is the cost efficiency. In 2024, Nestle implemented the Fuel for Growth strategy, which used AI to reduce costs, according to Nestle annual report of 2024. Another key factor contributing to Nestle's strong performance is its extensive global distribution network. As reported by Shaw 2024, Nestle operates in approximately 190 countries worldwide. This wide reach enables the company to expand its market coverage. What sets Nestle apart is not just its global presence, but how effectively it manages it. The company has invested heavily in advanced technology to support its distribution systems, warehouse this translates into a measurable result. Nestle's total assets turnover stands at 1.71, which is relatively high compared to many industry peers. This indicates that the company uses its assets efficiently to generate revenue. Let's now look at two additional factors that further reinforce Nestle's market leadership: strong branding and effective use of fixed assets. Firstly, Nestle's brand power plays a major role in driving customer loyalty and boosting sales. The company is well known globally for households like Nescafe, Nespresso, and KitKat. According to Nestle 2024 report, Nespresso generated CHF 3.1 billion in sales, and KitKat achieved double-digit growth in major markets. The strong brand's recognition enables Nestle to maintain pricing power and consumer trust across a wide range of product categories and regions. The financial impact of this is visible in the Nestle return of equity, which stood at 75% in 2024. Secondly, Nestle continues to invest in digitalizing its operations to improve productivity and efficiency. In Q3 2024, the company reported significant advancement in digital tools across its supply chain, manufacturing, and administrative functions. As a result, Nestle's fixed asset turnover, a ratio that shows how effectively the company uses its physical asset to generate revenue, reached 2.67, well above competitors like Kawan. Let's now turn to the weaknesses identified in Nestle's 2024 performance. These are internal challenges that could directly impact profitability, operational resilience, and shareholder value if not addressed. First, Nestle is experiencing a low inventory turnover ratio, currently at 5.3, while Kawan is at 10.0. This means products are sitting longer in storage before being sold, which ties up cash, increasing warehousing costs and risking spoilage in short shelf life categories. The root cause is Nestle's broad product portfolio, which, while strategic for market coverage, leads to the excessive inventory levels. Second, its high operating costs are eroding profit margin. Marketing and admin expenses increased notably in 2024 by 40 and 50 basis points respectively, pulling Nestle's net profit margin down to 6.68%, while Kawan is 9.98%. This cost structure is too heavy for today's fast-changing market. Nestle must improve cost discipline in non-core areas to remain competitive and protect shareholder returns. Thirdly, high leverage. In 2024, the company spent over CHF 12 billion on dividend and share buybacks, largely funded by debt. Its debt-to-equity ratio is 201%, signifying high risk if earnings drops or interest rates rise. This level of borrowing limits financial flexibility and raises exposure to economic shocks. Nestle must prioritize deleveraging to strengthen its balance sheet and preserve its ability to invest for future growth. As the business environment continues to evolve, Nestle Malaysia has several promising opportunities that can support future growth. One of the key areas is its continued investment in e-commerce and digital transformation. The company is expanding its online presence with a target of achieving 500 million in e-commerce revenue over 5 years, aligning with its long-term innovation strategy. While the current operating profit margin is 9.78%, slightly low due to high marketing and digital investment costs, these efforts are expected to drive stronger sales and improve asset efficiency over time. At the same time, Nestle focused on digitalizing its operations, including logistics, sales, and office functions, has led to fixed asset turnover of 2.67, well above industry peers like Kawan Food 1.4, indicating more efficient use of its resources. Together, these initiatives position Nestle to enhance productivity, reach more customers, and strengthen its long-term performance in a rapidly evolving market. Now, let's move on to threats. Despite its global presence and strong brand, Nestle Malaysia faces several serious external threats that could weaken its profitability, reputation, and long-term sustainability. One of the most significant is the ongoing consumer boycott, which has led to a noticeable drop in sales due to public perception of Nestle's alleged links to Israel. In third quarter 2024, Nestle reported that internal growth slowed from 2.2% to 1.3%, and North American sales dropped by 2.6%. This sales decline has impacted its financial, with net profit at just 6.68% compared to Kawan Foods 9.98% and a lower return on assets, indicating reduced efficiency despite heavy investment in technology. Another major threat is the rising cost of raw materials, especially cocoa and coffee, driven by climate issues and geopolitical tension in 2024. Nestle had to raise price on key products like Nescafe and KitKat, yet its gross profit margin still lags behind competitors, showing the strain on its cost structure. Lastly, Nestle's reputation took a hit after the baby food sugar controversy, where added sugar in products sold to lower-income countries contradicted to WHO guidelines. The backlash triggered government probes and damaged consumer trust, contributing to a lower operating margin of 6.67%. This threat shows how external pressures, where political, economical, or ethical, can directly affect both financial performance and brand loyalty. So next, I would like to highlight two key weaknesses identified in Kawan Food Berhad's recent SWOT analysis. So first, there is the issue about underutilization of its asset. Kawan Food currently reports a low non-current asset turnover ratio, indicating inefficiency in leveraging its long-term assets to generate sales revenue. This performance remains below the industry benchmark, suggesting that some equipment may not be fully productive or it is underutilized, which can hinder operational efficiency and overall returns on investment. Second, the company faced intense competitive pressure within the frozen food sector. In 2024, Kawan's Food's operating margin was moderate at approximately 12.58%, reflecting limited capacity to expand profitability in a challenging market environment. The return on equity stood at 8.03%, demonstrating a recent shareholder returns amid rising costs and heightened competition. So, for the SWOT analysis tracks for Kawan's Food, supply chain disruptions in 2024 led to increased costs and a decrease in sales volume, which in turn limited the company's ability to generate higher returns on shareholder equity. Although the return on equity, which is ROE, was relatively higher, it still reflected constrained profitability due to these disruptions, as higher costs and lower net income directly impacted ROE performance. On the other hand, we also have price wars, which poses a significant threat to the profitability and market position, with intense competition in the frozen food sector, forcing Kawan Food to lower prices or increase promotional spending, despite achieving a revenue increase to up to 317.55 million ringgit. The company's operating margin came in at 13.18%, highlighting the impact of pricing pressure. Additionally, frequent price competition risks weakening customer loyalty and threatens their company's long-term growth prospect by making consumers more price sensitive.
Assalamualaikum, my name is Farah Husna binti Syahruddin. My matrix number is 1232664. In conclusion, we compared the financial performance and growth potential of Kawan Food and Nestle. Firstly, in terms of general financial condition, Kawan Food has lower financial risk, a strong ability to pay short-term debt, and is efficient in controlling costs. On the other hand, Nestle shows better performance in asset utilization and provide high return to shareholder. However, Nestle also carries higher financial risk as it is used borrowing, but this is done strategically for long-term growth. Secondly, when looking at the ability to grow and generate future returns, both companies have long-term growth potential. Kawan Food manages its operation efficiently and is able to generate profit while keeping costs low. Nestle, however, used debt strategically to support innovation, expansion, and acquisition. It also benefits from a wide range of branded products, which helps deliver strong return for investors. Based on our analysis, we suggest investing in Nestle. This is because Nestle has a strong ability to sustain its business over the long term, offer high return on investment, benefits from large-scale production, and has a loyal customer base around the world.